What's going on, guys? It's Matt Fractal back with another video. Hope all is well. It's June 16th, 2025, and today we're going over another intraday price action interactive study on the GBP USD. If you guys checked out my last video, I did an intraday price action study on the same market. So I'm bringing you another video and going down the line, being consistent with videos, showing you that this fractal model, specifically in intraday setting, it is consistent. It doesn't happen all the time, but when it happens, it's a great model and a great setup to have in your arsenal. So as you know, we get straight into this video, so let's get into it. So today is Monday, right? The 16th. As I said before, always mark out a vertical line on midnight Eastern time, which is this candle, and then a horizontal line on that midnight open. So as you can see, we opened here at midnight. We traded up into this range. We consolidated before breaking the range, and then we had a high set, and then we retraced back into the daily range from this low to this high in the middle of the range, and now we're trading here at 4:19 p.m. Market closes in about 40 minutes, right? Let's get deeper into the price action. So the rules that I had set for the intraday scalping for the New York session specifically was we have to wait for the 7 a.m. opening. So let's draw that out. We're 7 a.m. 7 a.m. is this candle. It's a down close candle, so the opening price would be here. So we have to have a open at 7 a.m. That starts our time window for the New York session. Now, with price, what prices are we looking for in the market? What are we looking out for to give us a big signal in the market? If you guys watch my last two previous videos, I told you that the easiest way to have a signal in the market, intraday or even on any higher time frame or lower time frame, the old highs, old swing highs, and old lows, old swing lows, those are the easiest ways to see liquidity and big opportunities in the market. So after 7 a.m., which is here, I'm looking for where are the swing highs and swing lows on this hourly chart on the GBP USD. We have high up here, but that's from all the way from Thursday last week. We have a low down here. So this is this range here hasn't been broken. But this low is all the way from Friday, right? We want to be looking for intraday swing highs and intraday swing lows, meaning after 12 a.m., so after this vertical line, everything over here, this is the price action that we wanted to really be looking at. Of course, we can key off levels, which you see we keyed off order block here, right, from previous days. But for intraday, it's best to look for intraday liquidity. So where are some intraday swing lows and swing highs in this market prior to that 7 a.m. open? Well, the only swing highs that I see prior to this 7 a.m. open was here. You had a swing high here, right? But at 7 a.m., did we trade up into that swing high first? Well, we did. With this swing high here, we'll probably see that. Well, I don't even think it did. I think they made equal. Yeah, so no, we did. We traded up 1 pip above it. So we're going to see that on a lower time frame. Okay, so we have one swing high, two swing high. Now, are there any swing lows? Well, prior to the 7 a.m. open, we have this swing low here. This candle, and then when 7 a.m. closed, we created a swing low. So this swing low was created after the 7 a.m. close. So we wouldn't know that this was a swing low until 8 a.m. So we had the swing highs prior to 7 a.m. that we can already draw out and see if price can run above and reverse. But I'm also going to draw out this swing low because it is a swing low, and even though 7 a.m. had to close to create it, it's still a swing low that the New York session can trade into. So I'm going to draw out the swing low. We'll see that on a lower time frame. So with that being said, these are the levels that I'm looking at intraday because we're looking for swing highs and swing lows that form after the midnight opening price. Yes, you can look back into the range, as I said, of the previous weeks. We have this high, that's a PD array. We ran it. We have a order block here, a bearish order block. We ran into it here and we traded lower, right? But we're looking and we're specifically focused on the New York session. So as you know, after my hourly chart, I like to jump down into a 15-minute chart. Okay, cool. Got a 15-minute chart here. Let's zoom into this price action. Just right here. Okay, cool, boom. Okay, boom. We have a 7 a.m. open right here. What do? We open and we trade. First, we trade above this swing high here, right? Let's get deeper into this price action. When we traded into this swing high, as you know, we're potentially looking for reversals. Yes, price can trade above this swing high and blast through it. This one as well. But we have to see what price is showing us. When we went up, this was a full green candle at one point when we trade up here. And then look where we closed. We closed all the way back down here. So this is already showing signs as a reversal. So if you're looking to get short after this run, what's the next side of liquidity you're looking for if you're trading above a swing high? Swing highs are buy side liquidity. So you trade up into buy side. The next point you're looking for is the sell side liquidity on the 15-minute chart, right? And as you can see, price trades below that swing low. So if you're catching a move from this high to this low, that is something that you can do. You can specifically look in this range from this high going back down to this low, and inside of here on a lower time frame, there should be something to hopefully get you in short. The model that I use is the Fractal OTE setup, which is a lower time frame retracement entry in the direction you want to go. So if you're looking for shorts from this high back into this low, you want to go down to the smaller time frames, 5 minute, 1 minute. Look for that strong move down after taking the buy stops, a retracement back going into the buy stops, and then you're taking that short to take out the sell stops. But that's not what I'm really focused on now because this range was pretty small. And this swing low, as I showed you guys on the 1 hour chart, it only got created after 7 a.m. So this is 8 a.m. candle right here. We open at 8 a.m. and then we trade down, clearing out sell stops. This is the one that I want you guys to focus on. Why do I want you guys to focus on this? Is because 8 o'clock and 9 o'clock candles, those are like the heart of the New York session. So yes, we ran above an old high on the hourly, but then we ran below an old low on the hourly in the same session. So which one happened first? Obviously the run above the buy stops. So when we trade down into sell stops, this trade right now, this trade is not fully finished. Of course, you can take your partial, put stops into break even or into profit because you don't know if price is going to retrace. But what did I tell you? Intraday, if price goes below a swing low on an hourly chart or above a swing high, when you go down to a 15-minute chart or lower, you're expecting price to go the other way, right? Because it's take out liquidity. So first we take out buy stops. That was the first move of the day from 7 a.m. Then 8 a.m. candle, 8 a.m. starts. we trade below a swing low. So now we're not looking for the sells anymore. We're changing our bias or our direction because the model is showing us something different. It's showing us that we might have a reversal to the upside. Why? Because we took out sell stops. Simple. So I'm going to get rid of these, right? But actually, I'm going to leave that last one because now these highs above here become the next target for your buy setup, right? Because we took out now the sell stops under this low. This here, sell stops under this low. So if we took out sell stops and we're potentially going to reverse and go the other way, what do you think the market and the algorithm is going to attack next? We already attacked. So look, we attacked buy stops here, and then eventually it cleared out sell stops. Now we're clearing out sell stops. What are we going to attack? The buy stops now that are sitting up here. Because people that went short here, as I told you, they're not looking at the liquidity intraday. They think that, okay, we ran above this old high. Now we're going to be short for the whole day. But no, we ran below an hourly swing low in the same session. So you have to be alert, and you have to notice that, okay, yes, I might be short, but we have a potential reversal going back to the upside. So either let me get out my position, take profit, and look for a reversal. Or if I made money going short and I don't want to reverse, I'll just take all my profits here and let the buyers step into the game. And I'm done for the day because it's still following the model. We ran an old high in the New York session. So looking for the sell stops, we can potentially get a short to take that out. But as you can see, we ran that old low. Now we're looking for buy stops. Now, after we have our range, this is the fractal range building that I was talking about. What's our range? Well, from this low back up to these highs. So once I get the range mapped out, all I have to do is go down to a 1 minute chart and look for my specific pattern, right? Let's see if the pattern shows up. So we have all of these buy stops here, and we had sell side liquidity. We ran it on a 1 minute chart here. And guess what, guys? We're below the 7 a.m. open. That's very telling on what price might do for the session. Last video, I told you it's best to have sell setup or buy setups below the opening price of the day at 12 a.m. But price immediately traded upwards after 12 a.m. So no, we're not going to get our original drop lower power of 3 for the day, create the low today, and then rally for the rest of the day. So we would have to be more dynamic and still look for our model in the New York session, which we do get. A run below sell stops. We're below that 7 a.m. opening price. And now let's zoom in. We're looking for our model. What do I see after we after we run stops? We run the stops here and we have a strong move up from this low, above to this high. Do we break any structure as we make that large move up? Of course we do. We have this high right here. We get a break in market structure. So from this low to this high, that is our full range. Now, when we're retracing back lower into the sell stops again, right? We cleared sell stops here, traded up with a strong move, broke structure. Now we're trading back down, going to the sell stops again. People are trying to short now in this down move. That's why it's so fast. The market wants people to get caught in shorts after they broke the structure. People are trying to short all in here. But we already know where we're looking for. We're looking for these buy stops up here because our 15-minute range was created off of our H1 inception, which was the old low getting violated right here. Sell stops. Low, high. What is the retracement we look for, guys? Before I put out the fib. Your fib should have these levels. Yes, it's the 62 to the 79% retracement. Where do you put your stop? Below that range low, as I told you guys before. So getting in anywhere from that 1.35774 level to the 1.35758, anywhere in this range would be very optimal to buy the GBP USD in the New York session, 7 a.m. to 10 a.m., right? And as I told you, when we get our 62 to 79% range from the fib, we like to look back into the price action to see if we can match it up with a PD array. We have these order blocks here, which we already capitalized on this move. So we're not looking for these order blocks to have any real sensitivity. What are we looking? When we get to the old low, if we look above the old low, the first level or the deepest discount level from this low to this high, other than the old low, is the rejection block. What's the rejection block? The lowest down close candle in the low of the range from this low to this high. That's going to be this candle here. Boom. Rejection block, entry here, stop here, and then where are we looking to take profit? Are we just looking to take profit back above this high? Of course you can. If this is your model from this, catching your buy from here, stop loss there, and trying to exit above the next range high, that's a beautiful model. That's a quick scalp, a couple of minutes, you're out. You're done for the day. But if you're looking for day trading or intraday scalping, you're gonna want to hold for the session. So let's see how this looks. We run that low, strong move up, break structure, retracement into the 62 to 79% retracement, but more importantly, that order block, that rejection block level. Stop loss would go below this low, and then I would have any type of take profit. I would want to take it above the buy side liquidity. Why? Because I'm pairing the orders. I'm pairing this buy off of the sell stops with the sell above. Let me say that again. I'm pairing orders. I'm pairing the run below the sell stops here. I'm buying that. I'm buying the sell stops. And then when I want to get out and take my profit, I'm selling back to the buy stops, whoever wants to buy, because there's willing buyers up here. There's buy stops up here. So if I have a buy position, I'm going to have an easy target to give willing buyers, right? And then if you want to have any gradients, what are gradients or what are range gradients? Range gradients are basically if you have your fib from this low to this high, whatever gradient it gives you that's above the buy stops, that's where you can take your profit at. So let me put that up for you guys. So I have my fib, right? I'm grabbing the low to high retracement into the 62 to 79%. The expansion gradient levels, notice how they hit perfectly with price. You trade right to that 1.5, which was the gradient above the buy stops. Boom, it hits it. We go straight to 2.5. We have a nice little retracement. And then we shoot up into the -4 retracement all the way up here to cap off the day. And then you can also use PD arrays that match up with these gradients to get the most precision targets. As you guys seen, if you guys go back into the video, there was an order block a couple days or last week that we traded up into right here. I'll give you guys that to back test and see if you guys get a perfect exit from this buy entry here all the way up to the high of the New York session, right? So hopefully you guys are getting something from these lessons. We're looking for liquidity during the New York session. Whatever recent liquidity that got ran under a swing low or swing high or above a swing high, that is what you want to focus in on. So when we ran above that swing high here, we want to focus on shorts. But once we swept or ran this old low, now we have to switch our bias and now go the other way, which was long for today in the New York session, right? So same concepts, old low, the model, the range, and then the stop loss and targets. So hopefully you guys are getting something from this. As I said, this market was not traded today. This was just back tested. It's better to know your model than to just throw money at the board. So hopefully you guys are getting something out of this. Go to my description. You'll find a Telegram link. And yeah, Fractal out.